Good afternoon, I'm Robert Tan. From your wallet to the wider economy, join us as we follow the money. Stocks used to feel like a rich person's game. Today, you can start investing right from your phone. But as investing becomes more accessible, what do newbies need to know before putting their money to work? We follow the money with John Garcia, Head of Market Education and Advisory at GCash. Good afternoon, John. Welcome to the show. Thanks for joining us.
Good afternoon, Robert. Thank you for having me.
Now, John, this year is shaping up to be one of PSE's busiest year for new listings, share sales in a while. Now, is that pulling a new crowd of newbie investors? And is GCash ready to educate and pull them in?
Well, we're seeing an increase in participation and interest from retail investors, that's for sure. In 2025, the PSE reported around 3.6 million accounts. And it's a huge growth from its 2.8 million the previous year. Now, what's more interesting to know about this number is that 99% of that account is represented by retail investors. Well, of course, majority of the trade value turnover is done by the institution. But let's focus on the retail investor side. So that 99%, 3.2 million accounts, retail investors, most of them are doing it online. And what we've also observed is that in that number, 53% of that is represented by clients from G stocks.
Yes.
So we reported 1.7 million in that period.
Much?
Same year. Yeah.
So how is GCash prepared for this, for the new investors? And of course, educating them properly on how to use the app and how to trade in stocks.
Right. So giving access is just one part of the story. Through G stocks, our clients are able to open their account seamlessly within the GCash app. So account opening is instant, and the funding, the initial funding is also instant. So the entire process is processed in real time, if you think about it. From the first step in the account opening, in a few minutes, a client can have already an open account and a funded account, and they can start trading. We've also made it, aside from the speed, affordability is also another factor. Users don't need to have a bank account to fund their stock trading account. All they need is the wallet. There are no fees in the transfer of funds from the GCash wallet to the AB Capital or the G Stocks trading wallet. So now that we've fixed that one part, the next part, as you said, is, of course, even more important, the education.
The hardest part.
Yes. So we need to democratize not only access and affordability to investments, but we need to democratize knowledge. So that is why we are embedding education and advisory into the G-Stocks experience. So on top of the usual market education efforts that we do for our clients, we provide continuous advisory services in collaboration with our partner broker, AB Capital Securities. So through our G-Stocks PH, we are now giving retail investors access to professional research by a regulated
making it easier
entity
for them. But John, when you look at what's driving the momentum this year, the big names, the milestones, the deals that are getting done, what stands out to you right away?
Well, I'll give you two notable examples. Okay, let's start with a company that's really performing well in the secondary market. ICTSI, the first ever Philippine listed company that have breached the 2 trillion peso market capitalization. And it was able to do that in actually a year or about less than a year. So now the story here is not the company becoming that big, right? It's really what drove that growth. And ICTSI has continued to grow its international business, expanding its port capabilities, also adding new ports in Durban and Indonesia. In the first quarter alone, the company reported an increase, 29% increase in revenues, EBITDA around 26% increase. So now the investors are actually recognizing this, and they are rewarding such performance. So
it's really good to see a lot of growth companies today, especially we've been through a lot. We're in crisis mode. All the things, the issues, geopolitics, and also what's happening here locally. But for someone watching all these activities from the sidelines, how should they approach the market today, and what should they look for before deciding, let's say, whatever stocks they should buy? Do they have, what kind of research do they have to do? The kind of things that they're able to do to prepare themselves to be able to find what stocks to buy today.
I'd start with the backdrop. Okay, so it's real. There are continuing challenges. So even if the inflation numbers seem to be easing, I think the last report is 6.2%, but that's still way above the 2% to 4% BSP target. So what that means is we're not yet in the price stability territory. Okay, now what the investor should be looking at really would not be the headlines. Okay, they should look beyond the headlines. So try to understand how these economic factors and these geopolitical tensions would be affecting companies and industries. So they should be asking the questions, okay, which companies, which industries would be most affected? And how would these companies respond to such, to such challenges? Okay, so at the end of the day, which companies would be, taking most of the opportunity out of this crisis?
A lot of education needs to be done, a lot of learning. But behind all that, there's a lot of misconceptions around all these that discourage the would-be investors of today, like the 8K rule or the idea that you need at least 8,000 pesos at the minimum to start investing. Is that a myth? What is the minimum you can invest today that you think is viable and the kind of things that you teach the new investors of today?
Yeah, so okay, the 8K rule for a time was actually real. Now it can be more considered as a myth.
Why?
So okay, for context, back in the day, brokerage commissions are regulated. So there is a minimum 20 peso brokerage commission. And if the prevailing rate is 25 basis points for online retail brokers, for that minimum 20 peso commission to make sense for an investor, the investor should be trading at least 8,000 pesos worth in the transaction. Any transaction worth below 8,000 pesos, the ending would be the investor is paying the broker a higher commission than the 25 basis points because of the 20 peso minimum.
So at that point, at that rate, it won't be worth your time and money?
Back then, a trade of below 8,000 pesos would be expensive for the investor because they would end up paying more commission to the broker. Now, that minimum 20 peso commission was already taken out when the PSE deregulated the brokerage commissions. So now, all brokers are just charging variable and the lowest fee available right now to our retail investors is 25 basis points or 1/4 of 1%. So given that, regardless of any amount, you can already invest and the fee would be the same. So in this case, where we are today, the minimum really or the barrier remains to be the board lot. Okay, so depending on the price, there is a corresponding board lot and that would be the minimum investment. So upon last checking, the lowest investment that an investor can do today is 500 pesos.
500 pesos.
500 pesos. But that is today, Robert. In a few months' time,
it could change.
It will change.
Lower, higher?
Lower, because on November 23, if I remember the memo correctly, the PSE will abolish the board lot system. So because they're migrating to a new trading engine, new systems and everything, there's no board lot anymore. So now, if the stock price is 10 pesos, effectively, the minimum investment is 10 pesos.
We'd like to discuss more about that board lot, and at least for those who don't really understand much about the investing. But John will just take a short break. We'll discuss more after the break. Keep following the money. Welcome back. You're still following The Money with John Garcia, Head of Market Education and Advisory at GCash. Now, John, before the break, we were talking about the minimum amount people would, let's say, invest. It started with the 8K rule. Now you said It can go now as low as 500 or even lower than that.
Yes.
For those watching right now who don't really have that much understanding about that kind of investment, how can you explain that to them in layman's terms?
Okay, so that with the 8K rule. So now we have the board lot
Yes.
system, and this will be in effect until, third week of November. So depending on the price of the stock, there is a corresponding minimum number of shares that you are required to buy to be able to enter that transaction. That is a limitation in the PSE system right now. So, for example, if the stock price is 10 pesos, for example, according to the board lot table of the PSE, the minimum number of shares to buy a particular stock at 10 pesos is 100 shares. So therefore, 10 times 100, the minimum investment for that particular stock is 1,000
Yes.
pesos. Now, if we take out that board lot, when we take out that board lot, because that is happening in November, effectively, your minimum investment is just one share. And if the price is 10 pesos, then the minimum investment is 10 pesos. Now, that is really democratizing access.
So there's now no excuse for someone to say, I don't have enough money to invest.
Exactly. And now, from a capital markets development standpoint, that will bring in a lot of liquidity to the market, because now, every Filipino can really afford to invest. If they can set aside change from their usual spending. For example, they have a 100 peso budget today. They only spent 90 pesos. That 10 peso change can actually be invested in the stock market.
Now, we're looking now at small investors. Now, let's look at the bigger picture. Let's look at IPOs. SpaceX created huge IPO excitement, but its stock later turned volatile. Now, what can Filipino investors learn from that experience?
Yeah. Okay. About SpaceX, I guess the lesson that I would like to share to our viewers, and also we share this to our clients, not because a company is good, it makes it a good investment. Okay, so SpaceX is a good company, but it IPO'd at a bad price. That is how I would, summarize the entire scenario. So, when it was going public, it generated a lot of excitement. Everybody wanted to get into it. I heard stories of, wealth managers from our wealth partners. They having clients calling them, how can I invest in SpaceX? I want to put in money there for my kids' college education. That kind of thinking. Now, when you're investing in stocks, you're investing in the company's future potential.
Yes.
Okay, so the company is valued not at its value today, but on the promise that it can deliver tomorrow.
Yeah.
So now, when actually the expectations exceeded what the company can deliver, then, the excitement wore off and people
So what kind
started
of
selling.
learnings can the new investors learn from that today, especially when there are new companies that are going IPO and also companies that are, let's say, spending for growth, the hype, the excitement. What should they look at first so that they won't actually be, left behind?
Right. Okay. So instead of asking themselves, okay, is this a good or is this an exciting company? Is the growth story exciting? No. They should be asking themselves, okay, how much am I really paying for that growth? Okay, so they should be looking at things that are available in the company's prospectus. Well, we summarize that for our clients. Okay, what is the company's financials? How is it doing now? Is it profitable? Is there really a growth story? What are the concrete plans for the company to get from where it is today to where it is promising itself to be? And even more importantly, the valuation at which the company is taking that company public. Okay, if this is the IPO price, how much is really is the company worth?
But from that, John, it seems that there's so much information that needs to be taken into consideration when looking at the stock market, looking at companies. But again, for those who are just new, who find all these literature boring, they usually, it becomes like a stumbling block for them when they see all these, that they have to see all this information. How can we now make it easier to understand for the new generation, the Gen X, the millennials, who really want to invest, but then don't really want to go through all that?
Okay, so
Where does GCash come in?
Okay, if we're still talking about the IPOs, in the IPO space, we have our advisory. We come out with materials that give an overview of the company, the business.
How can you make it more exciting, sexier?
We do videos. We communicate in more dynamic forms, right? Now, but the story doesn't stop in the IPO because if the company is going public, you don't really have to chase the IPO and buy the IPO.
Yes.
You can wait it out, see how it trades in the secondary market. I guess that's where the G stocks experience really come into play. So like I said earlier, Robert, we are embedding the advisory, the guidance, the education in the experience. Okay, through our partnership with AB Capital, we're able to launch curated stock ideas within the app. So they go into the app, they can have guided list there. So we have stocks that we have our growth starter pack. So these are companies that, we call them quote unquote iwas sunog stocks.
Tama. You really have to have all that so that if you're educated, you have all the information, you make better decisions in the end.
We also have value plays, for example. There are a lot of undervalued companies right now, but the business is really doing good. So, and they're dividend paying. So meaning the dividend yield is higher with a lower stock price.
That's what they call the boring businesses that usually are overlooked.
Yes.
But I want to go into this, John. What can we learn from what happened in South Korea? Young retail investors borrowed money to buy stocks due to FOMO, the fear of missing out. But when the Kospi crashed, more than 1 million of them were left owing money they couldn't pay. What could we learn from what happened there?
Okay, let's start with what happened in Korea first. So, since before that crash, Korea was actually one of the best performing exchanges and indices globally, I would say. And a lot of this is driven by two companies. You have Samsung and HK Hynix. And these companies are, primarily exposed into the semiconductor, AI play, technology, which everyone is so excited about. So, of course, naturally, a lot of people would be wanting to invest there. And, to the point that these two companies became so much of a heavyweight in the index that movements in these two companies would affect the entire index significantly. So now, just like what I said earlier in the SpaceX example, if the company does under-deliver to the expectations of the investors will start selling off. Okay, now let's go to the aspect of margin facilities. So a lot of the retail investors that were affected in Korea are actually trading on margin facilities. So meaning, not all of their positions are actually paid for in cash. Some of them are extended to them by their brokers. So now, how does a margin facility work? When a position goes down in value because the stock price is going down and it goes below the maintaining balance of that margin facility, the broker will do a margin call. They will call the client, hey, you need to top up because your margins are going down. Okay. And if you cannot afford to top up... Big problem. If you cannot afford to top up, the broker will force liquidate your position. Now, that will start...
So you're losing more.
Okay. For the investor, you're losing more. So if the index went down a third. So if the index went down by 30% and your position went down by 30%, if it's all paid in cash, you only lose 30%. But if half of that is financed by your broker through the margin, effectively you can be losing double of what you're just supposed to lose. So from 30%, you can lose up to 60%. And what's worse is, you cannot hold your position and wait it out. Because your broker will force liquidate your position. Now that will start a vicious cycle. Stock price goes down, margin accounts, they need to sell. Since the margin accounts need to sell, the stock price will go further down.
So bottom
margin
line,
account need to sell, and it's a cycle. And
so bottom line, John, you really have to have the research, education. You can't bypass that to have an educated decision at the end of the day.
Well, probably they had an educated decision. That's why they went into
it.
They just
believe the hype.
They believe the hype too much. And the problem is, volatility is real. And if you combine volatility and leverage, it can become very, very dangerous. Now, also another important aspect here would be, were they diversified?
True.
Because for all we know, they could be all out exposed to those tech stocks. And that's
so many things to learn.
That's
But
a
John, we
disaster.
now have to move to our portion of the segment. It's a rapid fire segment. Just quick questions, quick answers. Let's start with this. Stocks or crypto?
stocks.
Okay, IPO or established blue chip?
IPO.
Why?
Of course, it's exciting.
Sometimes when it's too exciting and the hype, it might not be that good.
You know, companies, when they do IPO, okay, they will ensure that the IPO will perform well.
Okay.
So
they have to deliver.
I personally believe IPOs are offered at some sort of a discount.
Okay. Dividends or growth?
Oh, depende.
Why?
Okay. So when the
But if
market
you were to choose, which one would you choose first?
dividends.
Why?
Okay, dividends are evergreen. Markets are going up, markets are sideways, markets are going down. The companies will pay dividends because they're profitable. At the end of the day, you're investing in a business, not in the market.
Even during a crisis?
Yes, because even during a crisis, if the company is crisis-proof, so meaning they are evergreen investments, they are what we call safe havens, they are into essentials, they will still perform even in times of crisis. They will still be profitable. And as an investor of that company, you can still expect dividends. That's why dividend portfolios, even in the past few months, are really performing well.
It could also pay for your future expenses.
Potentially, if your position is huge enough, of course.
Now, before we go to number 4, I just want to get your opinion. We had a guest before saying that the penetration rate of the local stock market is around 2 to 3%, very low. Why do you think that is?
Well, I guess a lot of it is the barrier to entry, which the technology is fixing right now, and also the affordability. So I guess the next step here, the next gap to fix would be the education part.
Okay, let's move on. John, buy the dip or stay on the sidelines?
Buy the dip.
How are you sure that when you say the buy low time, when it's low, which stocks do you think should be good stocks? Again, you have to do a lot of research.
There are value traps. Okay,
Yeah.
It's cheap now, but should you really get into it? So they need to understand also the environment. So there are companies that they move in cycles. So they're cheap now, and definitely they will recover because you know that the industry will recover. It's just a matter of time. But there are industries that are somehow questionable. Okay.
What industry would that be?
We cannot say because the thing is, industries evolve.
Yeah, true.
Okay, there was a time that video rentals were a big thing, and then Netflix
Biglang
killed them
nawalan.
off, diba?
Yeah, true.
So my point is, not because they're blue chips today, they will become blue chips forever. So it's time to.
True.
You can
Especially today with technology and AI, everything's really changing.
Yeah, and our investors, what I noticed is that they are very discerning.
Okay, for a 25-year-old today, stocks, business, or skills, where should they invest first?
Skills.
Skills. Why?
I mean, if you have the right skills, and for example, you want it for investments, then you invest in yourself, you become good at fundamental analysis, technical analysis, you'll be good in stocks after.
Finally, John, for someone starting out, what's your single best piece of investing advice?
No one can predict the market, but everyone can prepare for it. So it's important to really study the companies, study the industries, and understand, all of these things that are happening in the backdrop, how will these affect the companies, and which companies will actually get out of this as winners?
Education is key.
Yes.
On that note, John, thank you very much for joining us this afternoon, sharing your insights, and of course, hopefully a lot of the newbie investors would really know and pick the right choices. They need to educate themselves and really get the right information. And hopefully, GCash allows that to democratize investing today. Thank you very much.
Thank you, Robert.
And that's all for today. I'm Robert San. Thanks for watching. Keep it here on the Bilyonaryo News Channel. And always follow the money.